Morning, everybody. 8:15 a.m. It's March 6th. Welcome to my channel. Yesterday, if you joined my live stream, I pretty much called pre-market what would happen, intraday what would happen. I had two trades go my way. One, I was very close to taking profit and moving up my stop, but I thought we could go a little higher, and it wound up hitting my break even. I think I was up 14 points or something like that in the trade. And then I had another long that um, wicked me out on my break even. I was up again 10, 11 points, and it whipped me out and then went to my target. So, two days in a row, I've traded the way I wanted to. Prior day, I had a nice green day. Yesterday, could have been a green day. Could have been. The second long, I was pretty confident in that we were going to hit my stop, which was below the low a day. However, it moved so far in my favor, I was like, you know what? Let me go to break even, and wound up whipping me out. So it's a story of my trading lately. First trade, I probably could have maybe had my target at VWAP, even though it wasn't 2 to 1. It would have been decent. Probably would have been the smarter play. On the second trade, all I can say is I did reduce my risk at one point to be very small. That would have never got hit, and then I would hit my target. So you always can look at those things and review them. What I am happy with so far is that I reviewed my stuff over the weekend, reviewed every day, and now I feel mentally I'm on the right track again. I adjust it to the way the market's been moving now. Okay? Because your body gets into a pattern, or your mental gets into a pattern of how the trade was happening. And I know one of my good friends and community members, Amalia, was trading with me every day, and he was seeing me catching these longs every day because the market kept giving these like same things, right? Coming right into where I wanted to get long, right? More or less cookie cutter of my setups. And then that changed. Okay. Always have to adapt and be honest with yourself. So, that being said, why don't we get right into it? Welcome to my channel. My name is Steve Gonzalez. I use market profile and bond profile to find structure in the markets, along with supply and demand, gap exposure levels, the most traded price of the year, the month, the week, and the previous day. That is my edge. Also use my bread and butter, my market internals. Okay, anchor view ops, a little ICT, my weekly expected move indicator that I give for free on my Discord. Okay, and we have a mixed bag with those expected moves. We'll go over them in a little bit of who's doing what with the expected moves. It's all over the place, just like our market. Okay, just like our market. Now, if you can, subscribe to that alert. Do this every morning. Give you the market story, the economic calendar, technical analysis, and give you the long and short trade scenarios in NASDAQ and ES futures every day. Every day. Okay. Now, if you want more in-depth coverage, I go live every morning. Join my Discord, Confluence Trading. Go to my YouTube homepage, click on the link, and sign up. What are you waiting for? Let me be your indicator. I will steer you wrong. Okay? I won't steer you wrong. Now, to wrap up yesterday, okay, we'll just show you the SPY for now. To wrap up yesterday, right? In early on, tech was strong, relatively strong. Okay? And I was almost very close to going long off the open because we swept the lows like I said we would, and we pushed up. That was the initial thing I said in the pre-market. Then I said we basically hit in futures yesterday that most traded price of the rolling year in the month right up here, right at the prior day's close, and that was all she wrote. I said if we failed up there, that could be a short, but the market didn't go down without swinging, right? Because if you look at the SPY and the QQQ, same kind of stuff, right? Qs are such relatively strong, even came down, popped up, even came down, popped up again. Okay, that was technology because it was leading. Then eventually, the market cap, the equal weight was weak, and eventually pulled down the market cap with it. But then we just consolidated here. Where did we hit? Last month's lows. That is a very liquid level. Everybody sees those levels, right? And right when this happened, this was about 2:30, and I said to myself, okay, I want to go long, but you know what? This has been barcoding, and literally, I said that's probably the low. I want to pull back to hear about, right? I think it happened like 5 to 10 minutes after I took a walk, and I was like, you got to be kidding me! Literally to the area I was gonna enter long, but that's just the way it goes. Okay, this market, look, couldn't go down, pop back up, right? That's the way this market is. It's the way the market is right now. Okay, and today, what do we have? Let's get right into the futures watch list and see what's the story this morning. It's all about crude. The Middle East tensions, right? They're retaliating. VIX is at a 25. We're going to have nice ranges again today. Nice tempo again today. Okay. Crude is at 85, almost $86 a barrel. It's up 6%. This is not good. The more crude goes up, more likely our markets are going to go down. Okay. You can't have high crude. It affects everything in the economy. Okay, that's why they call it liquid gold. It affects everything in the economy. Higher crude affects everything. Okay. Morning, Mark. Okay. So that's what's going on. Now, we have non-farm payrolls and unemployment numbers that are going to come out in about 7 minutes. Okay. We're expecting unemployment to stay the same at 4.3%. We're expecting to add less jobs than the previous numbers. Your guess is good as mine, and I don't really give a crap about the numbers. I just want to see what price does. Okay? We're at a point now where if unemployment goes higher, then that might look at the Fed looking to cut. If it stays, maybe we don't get a cut. But I don't have to get into that. Like I said, that's a fool's errand to get into the numbers, to say they're fake. It doesn't matter. It really doesn't. It might matter for the moment the news comes out. But at the end of the day, it really doesn't matter. Okay? You got to see what price does. Okay? Now, getting back to this list. Crude it was at 50 something dollars a barrel not too long ago. Almost at 86. 10-year yield's up. Silver is up 0.30. Gold is up 0.21. Dollar is flat. 30-year bonds being sold slightly. Dow is down over 0.5%. ES down 0.60. Nasdaq's down 0.81. Russell down 0.84. Bitcoin back down almost 2%. Is it gonna fail? Is that gonna fail? Who knows? Ethereum down 2.33%. Moving on. These things are probably going to change after non-farm payrolls, unless it's a nothing burger. All right, nothing is positive here. Netflix is on top. We're going to concentrate on the 1%ers. Google's down 1%. Broadcom down 1.16. Nvidia down 1.22. Coinbase down 2%. Now, about these semis, it looks like the government's trying to curb some exports or whatever. That's not good for semis. Okay, that's also what's going on. Now, moving on to top sectors here. Chevron and Exxon, no surprise here. They are up. Oracle, I believe, had earnings. Nope, they don't have earnings, but something else came out. No, wait a minute. Earnings, it says conference call 310. Samsara stock jumps. No, okay. We'll get into the Oracle. I have some news on that, why they're up. This been getting smashed, though. Been getting smashed. Let's go to some laggards here. All right. This is interesting. Why is this interesting to me? Because We're going down, and PepsiCo is down. Johnson & Johnson is down. That is not a good sign. Okay? When you got some safety plays down as well, that is not a great sign. Financial down, Goldman Sachs, Caterpillar down almost 1%. GE Vernova, my baby, almost down 1%. The mining stock down 1.8. That's interesting. Mining's down and silver and gold are up. That usually doesn't really happen too often. Okay? Going to sectors. You'll see what I mean here. The only positive is energy. Energy does not move our markets at all. Now, what it means is that is not good. That is not good. When XLE is your leader, okay? When it's your leader, like I said, it affects the whole economy. Now, the heavyweights, communications down 0.35, financials down 0.41, industrials down almost a 0.5%, discretionary down over a 0.5%. Remember, discretionary Amazon, Tesla, Home Depot, technology, Apple, Nvidia, Apple, Microsoft down almost 1%, semiconductors down 1.35. Risk off right now. Risk off right now. Okay? We look at a daily chart very quickly. This is a mess, folks. We tapped that 200-day moving average in futures, and that was you swept some liquidity, you came back up, hit into this big time resistance, and now look, right? We swept that previous day. Expected move today would be at least to hit around the 67.75s today. Maybe you tap the 200-day moving average again at 67.43. Look at the friggin' Nasdaq hanging out in the 200-day moving average, just going back and forth across it, back and forth, back and forth, back and forth. You can see, good barometer is to look at the 50-day moving average. It's flat in the ES. It's tilted down in the Nasdaq. A flat 100-day moving average. Okay? Market's not going anywhere. Not going anywhere. Okay? We have 2 minutes. 2 minutes. Let's look at these numbers. Let's look at these numbers. Non-farm payrolls. We're expecting 59,000 jobs added. Previous 130. This number is all over the place. It usually gets revised. They're almost non-reliable, but price moves on. The algos move on that coming out. Unemployment rate 4.3 expected, 4.3 previous. We're expecting no change. Okay, we have Fed Hammock speaking at 1:30. Okay, so this is coming out less than a minute and a half. Okay, if we're gonna go to Trump, what is Trump doing today? 8 a.m. President begins executive time. 9 a.m. in town pool call time. 1 p.m. President participates in signing time. 1:30 p.m. President participates in policy meeting. President participates in the meeting with Secretary of War. 30:30. President participates in a meeting with the Secretary of the Interior. 4 p.m. President participates in saving college sports roundtable. So far, okay. Now, real quickly, Oracle. So Marvell is a semi. Stock surged 11%. Semiconductor company lifted its full-year revenue outlook. Let's see. Tesla stock fell 0.6 at the electric vehicle manufacturers. UK sales dropped 37% in February from a year earlier. Oracle stock rose 0.2 following a report that indicated enterprise software companies planning thousands of job cuts. Ooh. Costco stock fell 0.4% despite the warehouse retail beating Wall Street estimates. That's about it, folks. We got 20 seconds. Why don't we look at the hourly charts here? Let's see what this market wants to do with this news, and we'll go back to the results. Let's see. 9 seconds. 9 seconds. You can see the daily candle here and the 4-hour here. Let's see. Boom. News. There we go. Let's see. They're coming in. They're coming in. Unemployment rate went up. Unemployment rate went up. Okay, so we went, let's go to the news. You see the initial shock was lower. Unemployment rate went up to 4.3. I'm sorry, 4.4. We expected 4.3. Whoa, whoa, whoa. Non-farm payrolls. That is not good. Okay, this is a number that might, like, this is crazy. Expect 59,000. We lost 92,000. Wow, that's pretty significant. Unemployment up, so the labor market's not looking too good. Now, how does the market handle this? How does the market handle this? Your guess is as good as mine. Because two things. Either the market takes this eventually as Fed needs to come in and make an aggressive cut, right? Now, what's also going to happen? See, we're getting a little sweepy. Getting a little sweepy. What's also going to happen? Okay? What's also going to happen is. How was I just thinking about? I just lost my train of thought. All right. I lost my train of thought there. Apologize for that. I was thinking about two different things at the same time. So, like I said, who knows what this is going to do? Does the Fed. Oh, I know what I was going to say. Now, remember, crude is going to affect CPI. It takes about 3 months for this $86 a barrel to hit CPI. That might affect it. Now, if you're a pure trader, maybe ICT, you just swept two swing lows into a bullish fair value gap. Okay? This initially would be bullish. Right? I don't know. Off the bat, this is bad news for labor. But we're going to have higher CPI, right? So what's the Fed going to do? Okay, what is the Fed going to do? Market is starting to like this now. See what I'm talking about? I'm not going to lie. What I was thinking about was I want to put a trade on right now to go long, to play that sweep. Because by the time the market opens, this market could be lifted up because if people think the Fed's going to cut now. Fed Watch tool. I don't think the Fed Watch tool is that quick to update that quickly. I'm gonna check it out. I don't think it's because the last time I think I saw it was it was looking at a pause. Yeah, I don't think it updates like minute to minute. So let's look at it here real quick. Fed Watch tool is 95% of a pause, right, for March 18th. For March 18th, let's do the compare. See, I don't think this updates live. Okay. All right. So now we have that news. It's pretty significant. Those jobs that were not added, right? So let's see if there's some headline we can look at here. Man, that sweepy's looking nice. I don't have to look there. All right, let's see. You'll see it somewhat here. There's more Fed speak today. Okay, talked about the Trump economic calendar. Now we do have. Sorry to say, I forgot this. Oh, I thought we had Michigan consumer sentiment today. That was an error. I thought we did. I apologize for that. I thought we had Michigan consumer sentiment. That usually follows non-farm payrolls. We have business inventories at 10 a.m. That's not really a market mover too much. I don't know why I thought it was Michigan consumer sentiment. I apologize for that. God. I'm telling you right now, regretting my long, but I'm going to wait. I'm not going to do that. Let's look at some more news. Slower job growth expected in February. Unemployment rate forecast steady at 4.3, but we know we just came out of 4.4. Pentagon designates Anthropic a supply chain risk. Yep. Then there it is. U.S. molds new rules for AI chip exports, including requirement of U.S. investments by foreign firms. All right, that's a negative. That's a negative. White House to press defense firms to boost production as U.S. strikes on Iran draw down stockpiles. XAI loses bid to halt California AI data disclosure law. Okay. All right. I think we're good there. I think we're good there. All right. Let's go. Let's go. Let's just look at yesterday's recap. Okay. Let's go to internals. My bread and butter. My baby. Okay. All I needed to do with my trading is make it more simple. And I've done that before. But then, like I said, you get used to trading a certain way. And then all of a sudden, wait a minute, those things aren't happening again. And your brain just gets like you're in a pattern of trading some way, right? So, but bottom line, yesterday, right? I was like, okay, what's the easiest trade, right? What's the easiest trade? Well, I'll go right to my Discord and show you the internals. Look at this right here, folks. Infotech. Okay. Is it not moving for me? Wait a minute. Let me go back. Let me go back to this here. Okay, right here was up 1.44%. 1.44%. So, what does that mean? Right? What does that mean? That means that that's a monster. The market's not going to be able to go down without a fight. That's why when we broke previous days, what was that? Lows, it bounced. Tried again, it bounced. Right? Then finally, notice right here, the market cap was starting to see how equal weight was just dying here. It was relatively weaker, right? Well, finally brought down the market, but look how it held here, right? And then boom, 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 boom. Look how it ended, 0.72. Top four sectors were not very weak. You're not going to be able to go down that much. It's just not going to happen. You can get emotional about it and be like, oh my God. That's why I was waiting for my long when I took a walk here. I was like, all right, I'm just gonna enter here. You know what? Right here. I was like, that's probably the low, but you know what? I can't watch this anymore. And then there's my pullback, and I would have had a nice long, right? But we did have some weakness, 2.5 ratio of volume going into down stocks versus up stocks. That's pretty decent, right? The Nasdaq exchange was down at a negative 2,000. I had my eye on that all down here, but I saw. What did I see? What did I see? I saw this monthly level right there go out. I know people are looking at that monthly level. That was the sweep, and I was like, that's probably it. That's probably the low, and it was. And then we went right back into where? Last week's range. Okay? We went right back inside the previous day's range, and it was like, all right, what? We dropped $4 today from the previous day's close, right? Tech was barely down. All right? Tech was barely down. All right? Now, let's go over to the dailies. Let's do those daily charts. So, what did we do in the dailies? Well, Friday's close has been a beast. That black line is last Friday's close. Okay? So, yesterday, doji candle. Opened here, closed here. So, we opened, drove up around to the 20-day moving average to Friday's close. 9 EMA daily. We couldn't go any higher. This day became a swing high. And then we proceeded to go where? Right down to the previous month's lows. The previous month's lows. Which would be, what is that? Let's follow. Right there. Right there. That candle. That was the previous month's lows. That's where we could not break. And we got bought up. Where are we now? 675.40. 675.40. So 675.40 is a slight gap lower than yesterday's lows. Okay? Remember, we are not doing much, folks. We are not doing much. Okay? Futures. Futures. Let's do it. Look at this friggin' barcode. I mean, look at these future sessions. You know what that tells you? The market doesn't know what the hell it wants. Doesn't know. You see what I'm talking about? Look at this balance. Remember I said, is this a new balance area? Looks like it is. Now, there's last month's lows and futures. Last month's lows and futures. Right here. Okay? What do? We just swept the previous two session lows. If we do something like this, open up in here, you probably got a long off the open. Okay? I'm going to be paying very close attention to that. Qs. What a bunch of garbage this is. This thing looks horrendous. This looks horrendous. Let's look at this together. You know I love my little green range here. Look at the friggin' trading here. You're in the middle of this garbage. Right there. You want a bad location? It's right there. Horrible. Chop, chop, chop. We're going up. We're going down. Oh, we're up. Oh, we're going down. Oh, we're up. Right into the year-to-date anchor view up. Oh, we're going down. That's what it feels like during the day. Every time I'm on my channel, I tell everybody, hey, listen, every time we go up, we can't. Every time you feel like it's going to go lower, we don't. I'm telling you right now, we're going to have a huge move. It's going to be a monster. We just don't know when it's going to happen, all right? It's going to be a monster move. Will it be go up or down? I don't know. Okay, I'm not a future teller, fortune teller. I'm not a genie, right? These other people online tell you we're crashing, which they always say, and then eventually they're right one time, which means nothing to me. Doesn't mean anything to me. My friend said that we're going to crash 50%. Oh, okay. That don't mean anything to me. Okay, that's not how the markets work. All right. Now, where are we now? Because what did we do? It was relatively, look, we swept the previous day's lows. I was watching that. I said, oop, tech is relatively stronger. I don't see, yep. Doji. What did it hit? Anchor view up for the year again. 2 days in a row. That was resistance. Now, what was hard about that was, oh my God, tech's up almost 1.5%, and it's up here. Is that a short? Even though I said, ooh, overall structure-wise, I said pre-market, that could be a short. Now it's a futures. It's a futures. Look at this mess. Ugh. God, it's gross. Very gross. Okay? Look, below the previous day's session low. Remember, this is like a 24-hour session. This is last week's lows. This is last week's lows. Okay? We're still inside last week's range. Tried to break out of it. Couldn't do it. Now, these chip export curves, software has got a lift of late, but you see we're still going down. But some software like Palo Alto, I think Salesforce, some like, and I was just like, oh, I actually had an order to buy Palo Alto at 142, and I was like, you know what, it's up to like 160 something now. Can't win. All right, so what do we do here in the NASDAQ? Well, your liquid level is going to be that last week's lows, right? 24668. Can we break it? Can we break this session low? Right now, we're below the previous session lows. But what if we hit that, close back inside it? Whoop, whoop. A little more push down here. Whoop. Market wants this weekly low right now. And it's going to be the last month's lows in ES. Let's see. Glad I didn't go long, right? I still think it's a mixed bag here. Okay? A mixed bag. Real quick, let's look at RSP. RSP is the equal weighted ETF. Treats all stocks the same. How we looking here? Hit the 50-day moving average yesterday and bounced. So that's not that looking that bad. The equal weight is actually looking better than the SPY. Equal weight looking better than the SPY. One more. Let's look at MAGS. MAGS is the MAG 7s ETF. How does that look? Whoa. Notice the difference, right? This is usually what moves our markets. MAG 7. Different than the RSP, right? This is usually what moves our market, MAGs. All right? Look at that. Hitting the 200-day moving average. Interesting. I just wanted to do a little roundabout there. All right, let's look at the XLK real quick. We'll do our sector roundup. XLK, remember this is the largest market cap weight in the S&P 500, around 33% of our market cap weight. It hit the 200-day moving average. Hit the 200-day. The last time you did that was, boy, we haven't hit that in a long time. Let's see. Well, we gapped above it here. It's kind of weird because we gapped above it. Let's just say the last time we went below it was February 27th of 2025. Interesting. Almost a year ago. And then we were down, right? That was the liberation. That was the low. Then we went above the 200-day and stayed above it, right? XLK. Interesting. And we'll just top it off with financials. That's the second largest market cap weighted sector, and that looks like garbage. But look, this might be catching a bid here. Look, that's the 2025 anchor VWAP. Below the 200-day. So financials, woof. Financials. Okay. Two of our big weights have been weak. Right? XLK, 200-day moving average. And then let's just go to XLC, communications, Google, Meta, and Netflix. That is not weak. Look at that sucker. That's not looking too bad. Right? One more, XLY, that's your Tesla, Amazon, Home Depot. That has not looked great either. 200-day moving average. Okay. Whoa, 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 folks. Our markets are definitely pushing lower. I'm glad I'm not in the long. The market's telling us right now, it's telling us, because we're going to go over to hourly charts. It is telling us we don't like that job, miss. We don't like the unemployment right now. We don't like it. My boy Rand's listening. The opposite. She doesn't like it. Okay, she doesn't like it. He knows what I'm talking about. All right, so let's go to hourly charts here. I gave this unemployment news a little bit of time to marinate. Okay, a little time to marinate. So, I'm going to get my marker out, do my magic here, because every day I seem to call what the market does. It's an uncanny ability, but then you get break-even trades, and then you can't even go, hey, look, I am so smart on this market. Look at all the money I made. Nope. Very frustrating, to say the least. Okay? All I could say is I am calling markets. I am trading the way I want, and eventually it all works out as long as you stay disciplined. Okay? Now, a couple things here. We did break this demand zone. That's what held the market yesterday. We did break two swing lows. But what did I just say before, folks? That's why I have the levels on my chart. That is last month's lows. People know the level. If you're short, what are you going to do? You are going to take some profits. You are going to take some profits. Okay? Now, we do have a bullish FVG right here. Now remember, the hourly close has to close through this to mitigate it, to get rid of it. Okay, this one I can knock down. Let's knock that down to size here. Before it was covered with the... Okay, so yesterday's lows underneath it, right? Prior day's overnight lows beneath it. We're trying to push through. a bullish FVG. Okay, last month's lows. Now, if this market closes back inside here, woo boy, woo. Now there is, I have to say, there is a little bit of supplies here in the hourlies here. So let me put that there, because what do we want to do? We always want to make sure we have structure on our charts that's going to be hard to go through, and then some structure that's going to be easy to go through. So there's actually another supply zone here. So this is moving down, not with poor structure, really. Not that bad. It's the structure is really not that bad. Okay. So market right now is not liking this. Now remember, we have crude. Crude is past $87 a barrel now. It's up 8%. Okay? That alone is going to weigh on markets. Okay? That's a product of war, and that's the only thing Iran has of any kind of thing, the Strait of Hormuz and all that. That's the thing they control a little bit. I believe they control China. They supply China with a lot of crude. So, interesting, right? So let's zoom out a little bit. Now, interesting, I only have 60 days on here. We can go into a bigger chart, okay? That's a major demand zone we went into right here. Okay? Do we take that out? Are we really going to take out last month's lows? I don't know. I don't know. Okay? Look at the daily candle. Pretty bearish. Look at that 4-hour candle. Pretty bearish. Okay? Pretty bearish. Now, this is a liquid level. Look what we're doing. We just swept it. We did a little sweepy. All right? Now, what I'm going to do, because of the time, I'm going to go and switch. And we will do this in my other workspace. Okay? Because I want to give you guys the previous areas that we can get into here. Okay? I want to make sure I'm giving you guys the right levels. So we're going to move over to the ES here. And we're going to go into my one chart that has more prior levels on it. Just give me a sec while it loads up. Here we are. Okay, so we're going to go to this main chart here. Okay, so this is where I have a year back. Okay, I have a year back. So if we go in the past, we have big demand that we already hit. That is at 67.29. 67.29. Okay, there's your last month's lows I just talked about, right? Big demand zone here. There's a lot of price action here. Okay. Now, then you have a little bit of a poor structure right here. You can see it in the volume. But I'm really going to concentrate on this. Can the market really rip through this? Remember I said a big move will happen. Okay. So far, this market has not proved to us that it can fall. So let's get into here a little more here. Okay. What does this market do? Okay, so right now, what I would say is this. I want to say this. All right. What we did yesterday, that was really the sweep, and then it retested right there, fell right, went into this bullish FEG, and it was a demand zone from the past. Ripped back up, right? Where did it go? Most traded price of the week. Then you consolidate in the overnight, and boom, boom, boom. It didn't fall like a rock. But this unemployment right now, the market's telling us they don't like it. There's last month's lows. There's that swing low. Okay? There's that swing low. Big demand zone here. Do we take this out today? Do we just rip, right? And notice there's a little bit, I don't love it, but there's a little bit of demand here, right in here. Okay. What happens there? I don't know. This big demand is going to be the temperature check for us. It's going to be a big temperature check. See what I'm talking about? How it's going to have a little bit of problems here? Little bit of problems here. Okay? So, what I would look for, a couple things with this level. Okay? Now, if we can close above that level, now you have some poor structure up in here. Maybe we can rip up to the bottom of these two lows. Okay? Now, possible bear trap. Big demand here. You notice when we came here once before, we ripped out. And then we went all the way up here, right? The VIX is at a 27, folks. Volatility is really going to be really beastly today. Let's see if we can break through last month's lows and hold it here. Now, another bear trap could be, we come in, we try to go for this swing low, right? That's around the 67.20s. That's the low for this year, believe it or not. So, can we take out this year's lows? I don't know. But if we sweep it and go like this, a higher low, woo! Because this is the way the market's been working. It's buy the dip, sell the rip. Look what our market's doing. Oh, we're going down. Oh, we're buying that dip. Ooh, we're selling that rip. Ooh, buying that dip, buying the dip. Oh, selling the rip. Oh, we're back up. Nope, sell the rip. Do we buy the dip? I know everybody just enjoyed that. Look what we're doing here. I told you we're going to have a little problems here. We're going to have a little problems here. All right. Now, moving on to our NASDAQ. This is a 4-hour chart of the NASDAQ. 4-hour chart. Okay, so the NASDAQ has some new developments here. We'll look at the 4-hour for a second. Okay. What do we notice here? Well, the most traded price of this year has moved down. 249. This green profile means this year. Now, this year's low is right here. That level, 24240. Now, the market's here. Market's here. Into demand. Okay? Into demand. Notice, this is last month's lows. ES is testing the last month's lows. The NASDAQ is not. Not even close. Why? Because recently software has been getting some love. Technology has been getting bought. That's why. And notice what I showed you earlier. All sectors are down, which is going to be the S&P 500 is going to move, especially with technology catching a bid as of late. Okay? So you have last month's lows, 24240s. Then you have a swing low here, a swing low here, and a swing low. Oh, that's not a swing low yet. Okay, let's go to the hourly chart. Just look at the sheer volume in this area. We're leaving it, right? We're leaving it. So, this is going to have problems in here, this demand. It already is. Okay? It's going to have problems there. It's already getting bought. Already getting bought. This is last week's lows. Okay, that's the liquid level we're looking at, right? Last week's lows. Right on it right now. Another level that people look at. So you have the monthly level in the ES, the weekly level in the NASDAQ. NASDAQ's been bullish all week. Tech's been driving every day almost. Okay? Very important. Remember, this is the low of the year. Okay, do we come down in this area again in this big demand zone every time we get in there? Bought, bought, bought. Okay? You're going to have problems here. It already is. You don't have any poor structure right here to just rip. Remember, the market's efficient. Very efficient. Now, a 4-hour chart, but look at this. We just kind of went up like this, right? And look what we did. And then look, boom, and look at these candles. Boom, boom, took care of all the poor structure. That's a 4-hour chart, but that's what the market just did. Okay, now you're in a demand, which what should stop the price action. A super weak market does this. Boom, doesn't even care about demand. Doesn't even care that we're not there yet. This demand's holding. All right, let's switch over to the hourly. Hourly chart. Let's do it. Okay, hourly. A little more granular than the 4-hour, right? So, all right, so let's clean some of this up. We blew through this demand zone. Okay, blew through that demand zone. Now we're in 2 more demand zones. Last week's lows. Okay, poor structure was down to about here. A little bit of a poor structure here. The bullish FEG. Now look, we're getting a higher low at 9 o'clock. Higher low. This is your liquid level. Last week's lows. That's last week's range. Okay. If I'm a short up here going whoo, and you're having problems, and we start to creep back inside last week, you're probably going to want to get out of your trade and you'll become a buyer. Then if new buyers come in, we could really ramp up all the way up to here, around 248805s. Okay? Remember, we just cleared up the little bit of poor structure that was left right here. It's done. The market did its job. Now you have a ton of demand here. It's going to have a problem, the market. Hence what it's doing, right? But look at this structure. This is the candle you want to focus on. That structure is more of a boom, straight down. Now, if the market's bearish and we do something like this, you could go all the way up to here, and that's your target, around the 248s. That would be a poor structure cleanup, right? Market's efficient, constantly does that, constantly does it. Then maybe you roll over. Okay? So what we're going to look at today in the NASDAQ is this. Last week's range is all we care about. Remember, last month's lows in the ES is what we care about. This is going to be a problem. If you don't have these demand levels on your chart, you're doing yourself a disservice. I want to know when markets are going to have a hard time to go lower on my chart. Am I going to want to short here? If you don't have a demand zone on your chart and you just look at red bars, what are you going to do? You thinking the market's going to go lower? Or you have a small time frame level that you think is going to hold? It's not going to matter. Okay? So make sure you know your weeklies, your monthlies, and your demand zones. Okay? So what do I want to see? We might get a little bear trap, which would be a little sweepy right there. And then whoop, back into last week's range, and you try to clean up that structure right there. Okay? Now, we also could just push up off the open, and then there's your long. And you might, right there, I would say you'd probably get a pullback to go up into here. All right? Now, bearish is, I'm not interested in that right now. I'll have to be honest with you. This demand zone, all this traffic, no. That is not going to be easy. Okay? So, your best bet is to let the market tell us when you get premium. And when you get premium, anywhere up in here to here, because this market's going to be very volatile, then you can look for the move. Do not try to shorten here. You're asking for problems. Now, don't get me wrong. I don't know what's leading the market yet. I don't know that yet. Now, I do see another supply zone staring at me here. So give me a sec. Let me just update that. Right there. So when you do the mixture of the FEG, and I don't go crazy with the FEGs, okay? Whenever you do the mixture of them, right? A demand zone is going to signify a place where the market's going to have a hard time going lower. A supply zone is going to be a hard place for the market to go higher. And what's in between them usually is poor structure, right? So it's almost like two different destinations here. Like if this is my starting point, my home, this is my work. You should go move from supply to demand, supply to demand. And in between will be some fair value gaps. Now, you have to understand that they're just a temperature check, right? If the market is super weak, you blow through demand zones. They don't even look like they matter, but they're mattering right now, okay? Just like a bullish FEG. If it comes in and rips back out of it, hey, that's bullish. Right off the bat, you're going to have support in poor structure, you're strong. If you come up in supply and you just start ripping it apart, guess what? That market's strong. Okay? That's how you use them. You don't look at them like, oh, demand, long. You got to like give a little bit of context to it. Okay? All right. Moving on. We're going to go right into market profile and volume profile. Here we are. Look at that. We're gapping down. All right? We're gapping down. So, let's get right into it. We're going to get right into this. I'm going to take this, put this right out here. We're going to write a little bit on here. Let's get right into scenarios. Get you guys out of here. All right. So, we got that level here. Okay. So, let's look at this. We're down here. Your gap fill, 6777. Okay. Your midpoint of the overnight, 6796. Happens to be your overnight VPOC. Okay. What we're going to look at right here is this big demand zone. Right? Gap fill. This is going to tell us what the move is. Okay. So, off the bat, okay, we're going to go for the long scenario. Okay. Remember, we have last month's lows around here as well. Okay. So, if we do a gap and go, be my guest, fall down, come into this demand, and you have that 67.18 swing here, I want to see how the market reacts. If you do this and whoop, lower, higher low, now you can just start ripping. And maybe you only get back to the gap fill. Maybe you only, remember, you got poor structure here, single prints. Maybe you just fill the gap and that's it, and the market's ready to roll over. Okay? This is very, very crucial. Now remember, here's where we open. So you only have this much long to this much short activity. So that's about 85% net short. Remember what I talked about that previously. Okay? It's not 100% net short, but it's close. It's close. And what's the theme of the market? The market goes down and you think, oh my God, and it rips. People buy the dip. Okay? So that's what I'm looking for. Now, maybe I'm really looking forward to hit this demand zone. Really, I really am. Okay? It doesn't like the numbers right yet. Okay? It doesn't like it. If it blows, like let's say it does, if it starts to blow, we're about to hit this demand. So if it starts to just gap and go, well, I want to see how far it can go. I still am not crazy about shorting in this demand. Just not. Okay? Might even go a little deeper. As long as you get a nice push back up with a higher low, try to fill that gap. Okay? It's all I'm really looking for here. Okay? There's a thin volume here that can be taken care of. Look like it wants this demand right now. Okay, so that's the longs. Shorts. I'm not a gap and go guy. I'm not gonna market opens up and I'm just gonna short. Nope. It's too wild. It's too unpredictable. Okay. So if this does do that, that's going without me. Whatever it does here, right? But then let's say you're like, ooh, I don't like that. Oil's up. I think there's a short here. Well, you're gonna wait and sit back and see this happen. Boop, 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 and see what we do if we fill the gap. There's supply right here. What if we do this? And let's say it's just a reflexive bounce, but the market really is not that strong, and you get a push, right? And then a lower high. And let's say the market is like, no, this market is like teetering. That means the longs got their trade. New shorts are going to come in, and that could be the move. Okay? That could be the move. Honestly, right now, I'm looking at a long as my easier trade. This short is not going to be easy because this market's going to be super volatile. And you could be waiting for a setup and you're like, okay, I think I want to get in, and then it could just go boom without you. And don't become a chaser. Okay? Don't become a chaser. So, that's the ES. Let's go to the NASDAQ. NASDAQ is gapping down into demand. Remember last week's lows? Right there. So right off the bat, I'm like, hands off shorts. For me, we're in demand. Hands off. All right? Right away from me. Hands off. I've tried it many times. I've shorted in demand like this many times, and you get like a little couple points, and then it goes whoop, and you're like, that was dumb. I'm not doing that again. If Randy Rand's listening to me, I learned my lesson. He knows what I'm talking about. He knows what I'm talking about. All right, let's get into scenarios here and we wrap it up. Now, we're going to go for the long. Okay? I know this last week's lows is important. 24667. We're in a demand zone. 100%. You goddamn right you remember that. Let me just see what's in this box. Whoop! My lord. So, we're down here, right? In your NASDAQ. You're thinking, woo! You're thinking, if you don't got a demand on your chart, you're thinking, oh my God, this is bad. What am I going to do? Right? Well, this just makes me go, this long looking nice. Okay, so, like I said, market could do a couple things. We could do a little more dipsy-do down, and then all you want to see is some type of push up, pull back to last week's lows. You got poor structure here to rip right into this supply and to fill the gap. There's the gap fill, 274774. Gap fills are not the close in futures. It's the range gaps, okay? That's not my rule. It's the people who started trading futures for 30 years ago. They don't look at the close in futures. You look at the range gaps, the highs and lows, okay? So, that could be the trade. Now, so or, right? The gap down is going to be the key here. So let me just erase that real quick. Let me erase this. All right, so let's put this line up again to signify our gap fill. Okay, gap fill is yesterday's lows. Boom, we have poor structure here. Okay, I gave you one scenario that I said, all right, let's get the bear trap in. Oh, we're going right into demand. And then whoop, right inside last week's. That's a long. Try to fill that gap. Try to go for this supply zone. That you should be done there. Okay, that's one. Second, you could just rip off the open, pull back to the last week's lows, and try to get the supply. Now, gravy on top will be the most traded price of this year now, 249s. Do we do that? I don't know. Look at the congestion here. You probably don't rip that apart. You probably don't. Okay? That's what I'm looking for. Could indicate it. I even say this: if you rip, look what's happening, right? That's the end of a demand to go into another big demand zone. Woo! That could be another sweep to go long. Okay? I'm a more of a contrarian trader, and I'm not just going to short because we're going down. That's emotional. That's you getting roped in by price action. It's what you don't want to do. Okay? You want to look at stuff objectively, not because things are falling. It's not how trading works. You're going to get run over like a truck. Okay? So, that's my longs. I am not gonna be short in the Nasdaq. It needs all this demand. It needs to show me, okay, sellers are here, boys and girls. They're here. Sellers are here. If I start seeing us rip, 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 okay. Now listen, I'm open. I flow like water. So I'm gonna be like, all right, listen, hey, we're blowing through these demands. All right, sellers are really in charge. There you go. I change my mind in a second. It's not hard. Okay? So we're making a little higher low here, right? So if you're a shorty and you're like, nah, I don't like this, but Steve said demand's not good to short in. All right, well, what do we want? You going to go out and buy some clothes? You want to pay more than you want, or you want to well, put it this way, you want to buy something that's on sale? That's different. Let's talk about you're a seller. You're selling your car. Do you want to sell it at a low price or sell it at a premium, right? Well, I would like to get this move. Okay, Steve said this could happen, but I really would rather have a short. Oh, there's the gap fill. Oh, wait a minute, there's supply zone. Oh, wait a minute, there's the most traded price of this year. Any rejections in here could be a quick short. Take out the overnight. Now, feel free to ride a little bit in demand. Because why? You roped in some buyers to again get into pain. And it's going to clean up this structure for you to short. Maybe you go up to the 249s, reject, retest, short. Anything in here right now for me is going to be tough sledding for a short. Okay? That's it. That's it. Smash the like button if you enjoyed that analysis. If you enjoyed that analysis. Okay? Now, I do this every morning. Hopefully you join me. Subscribe, set that alert. Okay? Give you the market news, the economic calendar, the leaders and the laggards. Okay? Technical analysis. And I give you the long and short trade scenarios. First on an hourly chart. Second on my market profile, volume profile chart. Okay? Different way to look at the markets. Don't short in demand because the market is falling. Don't do it. Let the market tell you it's weak. Okay? Trust me, it feels great to bottom tick or top tick or you're short and it works. Over time, it's not going to work when you short demand. Over time, it's not. Now, if you're going to be like my boy here, Rand, and he's going to pick up a point, then I don't have an argument. He's going to pick a point up. But if you're looking to get a large move, you're not going to get it. Okay? You're going to have a couple of crumbs? Okay. Well, that's not my style. But if you want to move, you're going to get a little move. It's going to make you feel like it's there. And all of a sudden, you're going to be like, oh my God, look at that buying. Yes. Yes. Rocket. Rocket ran. All right? So, now, there we go, folks. All right, now, if you want more in-depth coverage, and I really think you would want this, you're going to join my Discord, Confluence Trading. Okay? There I give you in-depth coverage, intraday commentary. I go live. I should go live today, probably around 9:50 a.m. Around 9:50 a.m. This is exciting. I like the gap down. Okay? I like it. I like it. It's in demand. I like that our market doesn't sell off. Okay? We're going to have a very volatile market today. 27 VIX, almost a 28 VIX right now. You're not going to have a lot of times to think about a trade. I'm going to tell you that right now. Not in the open. Ooh boy, not off the open, boy. You got to commit to that trade. Okay? It's going to be violent. Violent. Okay? So hopefully you can watch this violence in my Discord with me. With documents in here. All right. We got a little group that comes in there every day. I'm dropping golden nuggets, folks. I'm pretty much call the market each time as it goes. And I caution, hey, caution, gamma flip plan, hey, caution, every day. Hey, we're falling, but caution. I'm not a panicker. All right. So come in the room. All right. Now, everybody have a great weekend. Everybody have a great week. It's supposed to warm up in the East Coast here, Northeast, a little bit. All right. Now, everybody, hope you guys have a great day. Stay green. No trades to trade. If I see you in my Discord, ask me some questions. If I don't see you there, I'll see you Monday morning. Mr. Documents, I will see you shortly. All right. Later.